Buckle up, the death knell for the US dollar as the world's financial cornerstone has been sounded. Saudi Arabia's momentous decision to abandon its 50-year petrodollar agreement with the United States marks a seismic shift in global finance. For 5 decades, the petrodollar agreement between Saudi Arabia and the US has been the bedrock of global economic stability. Signed on June 8, 1974, this historic pact mandated that Saudi Arabia price its oil exclusively in US dollars. In return, the US provided military and economic support to the kingdom. This arrangement ensured the greenback's dominance in global energy markets and secured its status as the world's primary reserve currency. However, this era has come to a dramatic close. As of June 9, 2024, Saudi Arabia has decided to abandon the petrodollar system, choosing a diversified pricing strategy for its oil exports. Geopolitical and economic considerations have driven this monumental shift, embodying a movement towards a multipolar financial world. This evolution accelerated when the United States froze $300 billion of Russian assets in response to Russia's invasion of Ukraine. This unprecedented action sent shockwaves through the international community, showcasing the significant leverage the US wields over global financial systems and emphasizing the political risks tied to the US dollar. Nations worldwide now fear similar economic sanctions could target their assets, prompting many to diversify their reserves away from the dollar. Gold, a stable, geopolitically neutral asset, has emerged as an increasingly attractive alternative. The repercussions of Saudi Arabia's decision are enormous and alarming. By selling oil in multiple currencies including the Chinese yuan, euro and yen, Saudi Arabia will accelerate the global shift away from the US dollar. This move has further far-reaching implications, as countries are actively buying a massive amount of gold to reduce their reliance on the dollar for financial stability. Adding to the complexity, Saudi Arabia's participation in Project mBridge underscores its commitment to a new monetary paradigm. This project explores the use of a multi-central bank digital currency (CBDC) platform leveraging distributed ledger technology (DLT) for instantaneous cross-border payments and foreign exchange transactions. With more than 26 observing members, including the South African Reserve Bank, the implications are staggering. As Saudi Arabia bids farewell to the petrodollar system, it triggers a ripple effect across global economies, marking a pivotal moment in financial history. This shift signals the end of an era where the US dollar held unchallenged sway, paving the way for a future where its dominance is no longer assured. Meanwhile, central banks worldwide are racing to bolster their gold reserves at an unprecedented rate, indicating a seismic move away from reliance on the dollar. This surge underscores a fundamental reevaluation of the financial landscape, with significant implications for the American economy on the horizon. Firstly, with waning demand for US dollars, the specter of rising interest rates looms large. Loans and mortgages could become prohibitively expensive, impacting everyday finances for households and businesses alike. Secondly, the surge in gold reserves by central banks threatens to erode the dollar's supremacy. As nations amass gold instead of dollars, the stability of the dollar as a global currency hangs in the balance, paving the way for financial instability. Thirdly, the transition away from dollars complicates international trade, introducing higher costs and complexity. Consumers may bear the brunt of increased prices and disruptions in the global supply chain, affecting the availability and affordability of essential goods. Fourthly, a weakened dollar amplifies the cost of imported goods, from electronics to food products, driving up the cost of living for all. Everyday essentials could see significant price hikes, straining household budgets and dampening consumer spending. Fifthly, the demise of the petrodollar diminishes America's leverage in imposing economic sanctions. With reduced economic influence, the US may struggle to shape global policies and safeguard its strategic interests. Sixthly, a declining dollar may deter investors, diverting capital away from US markets and towards alternative destinations. Higher interest rates and a weaker dollar could undermine the attractiveness of US investments, potentially destabilizing the economy. Seventhly, the rise of digital currencies and blockchain technology presents both opportunities and risks. While promising efficiency, they also introduce new vulnerabilities, from cybersecurity threats to regulatory challenges, posing unprecedented challenges for financial markets. Finally, businesses must navigate heightened currency fluctuations, requiring agile planning and risk management strategies. portfolio diversification becomes imperative to mitigate the impact of increased volatility on international operations. This comprehensive breakdown illuminates the multifaceted repercussions of the petrodollar's demise, offering a stark portrayal of its potential impact on the economy and daily life. In today's volatile financial landscape, safeguarding your wealth is paramount. For over 4 decades, Swiss America has been dedicated to guiding clients through the intricacies of asset protection. With gold's enduring value offering steadfast privacy, preservation, and protection, our experts provide a no-obligation, just education-tailored strategy to secure your financial future. Choose gold, an investment not just in a commodity, but in a legacy of strength and resilience. Take the first step towards safeguarding your wealth. Call us today at 1-800-289-2646 for a consultation and discover the benefits of gold that endure across generations.